Welcome to the channel. Today's date is November 21st, 2024. We're going to be comparing Walmart versus Target. 2 days ago, we compared Walmart versus Lowe's because they both reported on the same day. But Walmart versus Target is pretty much in the same industry. And we're going to give you a stock pick if we had to pick one. So let's get straight into it. As always, we start off with the markets. The Dow Jones is up 507. The NASDAQ is up 35. The S&P is up 37. This stock market continuously goes up. As y'all know, I'm a big bear. I believe we have something severe coming. I'm pretty much all invested in T-bills. I only have one or two stocks that I own right now, which I believe are pretty much like bonds. So if we do have a downturn, I believe those stocks will more than likely go up. And also here we have the 10-year yield. The 10-year yield is back up to 4.42. It hit 4.38 a couple days ago. And we think a lot of that had to do with the Ukraine-Russia news, but now we're moving back up. I like to talk about the 10-year yield because I believe it's going to tell us what we're doing in the market currently. If we're rising, that means I believe bond traders are worried about government debt and they're worried about inflation. But if it's down, I think the stock market is more than likely going to be in crisis. So let's talk about Walmart first. We're not going to completely go over Walmart as we did 2 days ago. We went in a little bit more detail. As you can see, Walmart is still up. And Target, you can see they got crushed yesterday and they're down. But because Target reported earnings yesterday, we wanted to go in a little bit more detail. I think this still fits our theme that shoppers are trading down, going to lesser stores. I talked about how I went to Aldi's and it was completely packed. And I believe that shoppers are going to Walmart. Walmart has a lot more groceries, which the CEO talked about here a little bit here. Walmart has a lot more groceries. 60% of their sales is groceries. So people are buying their necessities and you still got to have food. So they're going into Walmart to get cheaper prices. And I believe that right now they're cooking at home more because I believe it's cheaper to cook at home than it is to go buy fast food at this current time. So as you can see here, it was Target. It said that it expects full year adjusted earnings per share to range from $8.30 to $8.90. And that's lower than the $9 to $9.70 a share. Right now in the street was predicting $9.55. Target shares plunged yesterday 21% based on these bad earnings. The CEO said lingering softness in discretionary categories and the costs associated with rushing shipments and preparing for short-lived port strike. And I think, and I agree with him on that. More than likely what they did was instead of October, November, December being in one quarter, they probably pulled those forward because the strike, I believe it was October 1st. So what they did was they moved their shipments up some, which counted in the last quarter. So if you're bringing in a lot more inventory than what you believe you're going to sell because you were afraid of that port strike, that probably really did hurt their earnings. But what I believe is even worse on Target is that Target sells a lot more other items than groceries. They got I call it small as compared to Walmart. Their grocery aisle is a little bit smaller. And for me personally, if I was advising the CEO, I always like that Walmart has a entry for groceries and an entry for home. Target normally only has one entry. And if I wanted to go and just get groceries, I just like to go into the grocery aisle. But if I'm going to go to Walmart anyway, I want cheaper prices. And I believe they have a lot more inventory. So I believe shopping at Walmart can be a little bit better. Some people think differently. Some people like the environment of Target, so they go ahead and go to Target and willing to pay a little bit more prices. And one thing that did happen in this quarter, which is good for the economy as a whole, Target a couple months ago has started lowering prices because consumers were demanding it. They're trying to purchase things at the least price that they possibly can. They're going around, they're looking for bargains. The money is tight out there. I talk about it a lot on the video. I don't know when it's going to come out and affect the overall market. If I had to guess, people pretty much stopped buying things, and now they're experience they're going for experiences. Like the Delta CEO said that their company is doing well. They reported good earnings and they reported bright for the future. People are traveling. And so they're not buying TVs, they're not buying couches, they're not buying stuff like that. They're traveling and they're buying their necessities. But people on the low end of the economic scale are really only just buying what's absolutely necessary. The COO said it's disappointing that deceleration and discretionary demand combined with the cost pressures have caused us to take our guidance back down after raising last quarter. So they're starting to see what I believe is going on in the economy to where Target is being hurt. So let's go into which one would I purchase and why. So here's Walmart. We're going to go through their numbers. I tell you at the end which one I would buy, but based on these numbers, you can kind of guess as I'm going through them. So Walmart, their present PE, their earnings is $1.47. They have a 60.19 PE, and their forward PE is 33.43. And this is what I do when I come up with an idea or I see something, I immediately go in and I like CNBC. So this gives me my quick glance of details. When I want to go more in depth, I go to Morningstar, I go to S&P, something like that to get more detailed information. And I also go to the company's quarterly report, annual report. And they also have only paying a dividend of 0.94. They have a return on equity of 18.97, and they have a debt to equity ratio of 55. So these just be quick glances. They don't go into much detail. I mean, you would need to know what the debt to equity mean and things like that. So also with this PE of a PE of 60 and then a forward PE of 33, a company like Walmart, something must have happened. They must have took some type of big charge or something like that in this quarter, because a 60 PE is outrageous for a company that is growing at 5% and saying that their forward PE is going to be 33. So one of the last things I like to go down and compare what their earnings are now and what the earnings are in the future. And CNBC gives you a really good snapshot. So you can see in the first quarter of 2026, well, of 2025, they're expecting 60, 67, 58, and 64. I mean, when you're actually on their app, they give you the current earnings, past earnings, and future earnings. But this one just gives you the both future earnings. So this is just showing that their earnings are really not growing that much. And they're, like they said, they grew their revenue by 5%, grew their profits by 8%. So that pretty much falls in line. So that's a good snapshot of what they plan on doing in the next 2 years. We have to go and find what their current PE is now, and what problem they might have had to report such a bad PE at the time. I mean, currently such a high PE, at the time. So then we go to Target. So Target, as you can see, it got killed right here. That was yesterday. It got absolutely murdered. As I said in the article, it was down 21%. I mean, the stock is all the way down to 21. They have a high back here in July of 2021. It was as high as $261. And Walmart is pretty much at an all-time high right now. They have a current PE of $9.44. Their earnings are $9.44. Their current PE is $12.87, and their forward PE is $12.87, which basically means that they're, as compared to now, they're going to pretty much report flat earnings, which pretty much is in line. They do have a dividend of 3.69, which I like. I like to have dividends. I like to be for my capital to be earning something, not earning nothing, unless it's in a super growth industry. So let's go down, and they do have a return on equity of 32, a lot higher than Walmart's 18, and they have a higher debt ratio, which is not good, 110, which in Walmart's was 55. So, and with Lowe's, they're giving their current PE and and then the 2025 PE, which is better. I don't know why CNBC is on 25 and 26. But as you can see here, Target at $2.12 as compared to $2.03. $2.67 as compared to $2.57. $2.28 as compared to $1.85, which is their poor quarter that they just reported. So as you can see, they plan on growing their earnings a lot more than Walmart. Target has a much lower PE. They got a lot more debt, which I believe is sustainable. They'll be able to pay off their debt. They can easily cover their dividend of $4.48 as compared to a dividend, their earnings of $9.44. So I believe their dividend is safe. I believe there's a whole lot more value in Target. So if I did have to purchase one, now I'm a super bear right now. I believe that when the stock market does turn down anywhere between 20 and 50%, then normally they spare no one. Target's going to probably fall too. I'll be really shocked when you have a big market downturn like that. So if Target was something that I wanted to purchase, I would probably watch it, wait and see how I do. But as I said, I wouldn't want to purchase any of these stocks right now. And Target is a good company. I don't believe it's a great company. And I only like to purchase great companies. That's the good thing about investing. And that's a good thing about when you buy shares of a company, you should feel as though that you're buying the whole thing. And a baseball analogy, you don't have to swing at a curveball. It don't matter in investing. It don't matter how many strikes that you take. You're not going to be out. But if you can wait for the perfect pitch that comes down the middle, and then you can swing for the fences. That's what I do now. So would I pick Target over something like a Meta if they both down 50%? Absolutely. I'm going with Meta all the way. Now Target may come down to unreasonable levels, and to say, man, this is such a good buy that I have to purchase it. But I like to go from home runs. But if I did have to pick one of these stocks and I was told you got to buy between Walmart and Target, so over the next 5 years, if I had to guess, Target will outperform Walmart. That's just a guess of mine. So if this information was helpful, please subscribe, please like, please follow. Good luck investing, and we out.